Hey traders, going into the week of 12th of January, 2026. Last week, the VIX moved from 15.14 to 14.48, indicating a slight decline in market volatility. The U.S. 10-year yield sits at 4.169% versus 4.191% at the open of the week. TLT is above the 30-week SMA and exhibiting a positive slope. Using Weinstein's framework, bonds remain in a Stage 2 environment. As long as TLT holds above the rising 30-week SMA, the intermediate trend in bonds remains constructive. Option sentiment data shows that total put-to-call ratio reduced to 0.75 from 0.83 last week, while the equity put-to-call ratio tapered to 0.47 from 0.56. This shows investors are becoming slightly more bullish, as a decline in both total and equity put-to-call ratios suggests increased appetite for calls relative to puts. The percentage of stocks in the S&P 500 above their 50-day moving average is at 70% versus 57%, signaling a strengthening short-term trend. At the same time, the percentage of stocks in the S&P 500 above their 200-day moving average is 64% versus 59%, implying that the medium-term trend remains constructive. Additionally, over half of the index constituents are in Stage 2 advancing phases, reinforcing that leadership is expanding beyond a small group of stocks. Key takeaway: this week favors long exposure in hot stocks within hot sectors, with expanding leadership and controlled volatility supporting selective, trend-aligned trades. This is data vesting, trading with science, not emotions.